I hope you had an absolutely wonderful day. I appreciate you for showing up. Today I'm going to walk you through a book map from A to Z. This is going to be more of a beginner to intermediate breakdown. So if you haven't touched order flow before, you're in the right place. And if you have, I think you'll still pick up some stuff. Before we start, I have an interesting question for you. If you saw this chart, what would you do? Would you short, long, no trade? Just be honest. And for context, this is the pre-market low, and this is a 200-day moving average. Drop your thoughts in the comments, and we'll get back to the answer in a couple minutes. So let's begin. What is Bookmap? So most of us have learned candlesticks charts, right? Candlestick charts, candlestick patterns, double bottoms, inverse head and shoulders, all that fun stuff, right? But here's what candles do not show you. They don't show you the orders sitting in the book waiting to be filled. They don't show you who is buying or selling aggressively. All you get from a candle is the open, the high, the low, the close, and the actual volume bar. So Bookmap solves that issue. It's a real-time visualization of an actual order book. You see limit orders as a heat map, you see executed trades as volume dots, and you see how price interacts with all the liquidity in real time. An interesting stat that Bookmap produced was that traditional charts only show you about 5% of market activity. The other 95% is what happened is in the order book. It's very interesting to think about. Only 5% in traditional charts, and most of it is hidden and it's activated in the order book. Very interesting to think about. So, okay, why order flow over candles, you might ask? On the left, you have the candlestick charts, right? It's backward looking, it's usually a little lagging, it's hard to see who's buying or selling. Support and resistance can be guesswork based on historical price, and unfortunately, sometimes you need wider stops because you're ideally waiting for a candle close to confirm until you enter, right? So on the right, you have the Bookmap order flow. It's real time, it's in milliseconds. You see every order in the book plus executions. You can literally watch aggressive buyers slam into passive sellers. You see actual liquidity walls on the heat map, and because you're entering on live flow instead of waiting for a candle to close, your stop losses become much better. So your risk reward is much, much, much better. That last point is huge. We'll come back to that a little bit later. So going back to the initial question, would you go long, short, or no trade here? So most people, unfortunately, probably would short this. They're thinking, oh, geez, it's a pre-market low. All I see is selling volume the last couple of minutes. This is a 1 minute chart for reference. So most people would probably take a short somewhere right here. All right. So fast forward. This is the actual trade that happened last week. This is a trade that I took. What happened was, see, candlesticks don't show you this, but on actual book map, there is a very, very large sell order that happened here. This is about 600 orders that flooded, right? And the sellers were unable to continue lower because buyers ended up absorbing everything. They absorbed 600 orders worth and then they just completely reversed. And they reversed for the next about 2 hours, right? I ended up taking a trim here and then I got stopped out here. Not a full target, but still almost a 5 hour trade. And you wouldn't have really seen something like this just from candlesticks only. We'll talk about absorptions in a little bit later. So getting started with actual Bookmap and their pricings. So here's kind of a guide about their different tiers and their pricings. So digital and digital plus, truthfully, I mean, I wouldn't really recommend them if you're actually taking Bookmap seriously. I would recommend either the global or the global price. And something that's important, market data fees are separate. So it could be anywhere from 34 to 79, depending on how many different market data providers you are using. Truthfully, it's not cheap, but once you give it a go and you actually understand how Bookmap works, it's very, very hard to go back to only candlesticks. And Also, Bookmap provides usually pretty good discounts throughout the year with holiday stuff, so just be on the look for that type of stuff. So the actual heat map, this is pretty much the core of Bookmap itself. It looks like absolute chaos when you first look at it, but after you do some tweaking in the settings, it's usually not too bad and you'll pick it up very quickly. So think of it kind of like a thermal camera for the market. It shows you limit orders sitting in the order book. These are passive participants. They've placed their order and they're waiting for price to come to them. The color tells you how many orders are at each price point. So blue, you don't really necessarily care about. It's low liquidity. Price action moves through it very quickly and easily. Yellow is more moderate. You still truthfully don't care about it. Orange and red, however, you do want to take notice and care about this. 95% of the time, you only will care about orange and red. So keep that in mind. Right, volume dots show executed trades. Green dots mean someone buys at the ask. That's aggressive buying, so bullish pressure. Red dots mean someone has sold at the bid, right? Think aggressive selling and bearish pressure. So the size of the dots really matter. Bigger dots equal more contracts, which means more significance. Don't get distracted by tiny dots. Same thing with the blue and the yellow of the heat map. You don't care about them, just like you don't care about small dots. You only care about larger dots, right? So some things that you kind of want to look out for, kind of a pattern. If you see large green dots, like a very large green cluster at a low, so in this case, maybe a demand zone or a support level, and you see buyers stepping in aggressively, there's a potential for a reversal up. Vice versa, if you see a lot of red dots coming in at a high and sellers are stepping in, there's a potential reversal, right? And then green dots, so bullish pressure hitting an orange wall. That means buyers are testing resistance in this case. And you want to watch for either an absorption or a break, and then you would kind of plan your trade accordingly. Same thing, dot sizes matter. So the session volume profile, another wonderful, wonderful tool on Bookmap. We'll talk about the actual Bookmap itself in a couple minutes. I just kind of want to get through the slides first. Four things to know is the first thing is the point of control is the longest bar. It has the most volume at that price. Think of it as a fair value. Price action tends to gravitate back here during consolidation. A high volume node, price is where a lot of trading has happened. These act as support and resistance. So if your key levels, such as a support level or a resistance level, supply zone, demand zone, whatever, and they align with a higher volume node or a point of control, that's an additional confluence. That's a stronger level. Vice versa, a low volume node, that's minimal volume. So price action tends to absolutely just blow through these areas very quickly. So kind of a side note, you normally would like to structure a trade around a point of control or a high volume node, hiding your stop loss behind that area, and then targeting the other side of a low volume node because price action most likely will just completely run over a low volume node. And I'll visualize all this on the charts in a couple minutes. But just for a quick tip, if this is more for extension-based traders, not necessarily reversal-based traders. If price action is above the point of control, usually you would like to lean bullish bias, and if it's below the point of control, you would lean bearish bias. So an order book and time and sales. Current order book, or COB for short, these show live limit orders at each price right now. It's different from the heat map because the heat map shows you the history. Current order book is snapshot, right? So if you see a high number of contracts, say 300 contracts at one specific price level, that could be either a support or resistance, but you want to watch out because if that number keeps dropping as a price approaches, those orders are probably getting pulled, what is known as spoofing. It's a fake wall designed to trick you, right? So in this case, this is what the indicator looks like on Bookmap. So this is not a spoof. This is an actual order that was placed. 160 orders were placed right here at a limit order at 68.50, right? You can see that in real time on Bookmap. We'll talk about spoofing when we pull up Bookmap. But going to the time and sales, this is the tape, real-time feed of every single trade. The information provided is the time, the price, the size, and the color. So if you see green on the tape, what that means is green is traded at the ask, red is traded at the bid. So what you're looking for ideally is looking for rapid large prints, so 10, 20, 30, 40, 50 contracts firing off in a sequence. Especially if they're above 50 contracts, that's usually institutional activity. If you see multiple green coming through in a row, that's strong bullish buying pressure. And if you see all red firing off in a consecutive sequence, that's usually a lot of selling pressure coming in. If you see a mixture of greens and reds, that's usually a little bit more of kind of indecision and not a true clear direction, and you want to just be mindful of that and potentially just sit on your hands. So getting to the actual indicators, this is where Bookmap becomes fun. Uh, by the way, this specific indicator and all the other indicators I talk about are only available for the Global Plus plan for Bookmap. Just an FYI. So absorption is when aggressive orders, when I say aggressive orders, that means market orders, very important to understand, are getting completely eaten by passive orders, which are limit orders, and price does not move. So imagine this. Tons of green dots are slamming into a level. Huge volume is trading, but price isn't going anywhere. That means there's a massive passive seller there absorbing everything. The wall is not breaking. That's a good sign for a potential short, right? Because the bulls are just getting absolutely shut down and the bears are absorbing everything. How to trade absorptions? Kind of a five-step process. Price approaches your level. You watch for aggressive activity hitting the level. Absorption triggers when you see high volume with no price movement. And then you wait for the reversal to actually start, meaning the dots change color and price begins moving away. Then you enter in the direction of the reversal with your stop either below or above, depending on the direction. That's very, very important. You don't want to just immediately enter a trade. You at least want to see the dots changing color because absorption alone is not a trade signal. It's used as an additional confluence. And also it has to happen at a level that matters and have other additional confluences. Like if an absorption happens in a random middle of a range and not at a key level, that doesn't mean anything. Something to keep in mind. Remember when we were talking about spoofing a couple slides ago? So this is not a spoof. This is actually pretty cool. So this is an order that ended up getting filled. All these orders got filled. If you see all these different red huge dots, notice the dot sizes. The very large red dots versus maybe very tiny red dots. A lot of contracts are being filled here, right? A lot of activity. And price action failed to break below 6,900 area. And more limit orders ended up activating. So this got absorbed, the first area, but you got completely absorbed. And then more limit orders, in this case, buyers, are stepping up to defend. So that's a very, very good sign. If you see this in real time, this is when you would actually want to be taking a long position. So if you see here, you wouldn't want to be taking a long right here. You'd ideally want to be waiting to start. Remember, like I said, you want to start seeing the flip, right? So in this case, you don't want to be, this is still a lot of red, right? You want to be waiting to start seeing green. In this case, here, right? You want to be entering a trade somewhere over here, not immediately as it happens, because there's a high chance that it still can continue lower. But when you start seeing that flip and bias, that's your signal to take this long entry. Even if you get in quote unquote late and you're up here, that's still only a 5, 6 point risk. That's very little. Your risk is doing something like this with order flow. It really helps reduce your risk and you have better risk to reward trades. And you wouldn't see stuff like this on just regular candlesticks. So very, very important. Another thing is the markers. So this marker means limit orders are being placed, right? So in this case, 150, and you see right there. And this, I don't know why, but Bookmap loves arrows. This is an absorption. So it's a similar arrow, can be a little confusing at first, but depending on the bias, this absorption is either green or purple. Green is bullish and purple is bearish. You can change colors if you'd like, but these are just the default things. So sweeps, going back to the arrows that Bookmap loves, this is sweeps. So instead of an upwards arrow, they are sideways arrows. Purple is bearish and green is bullish just for default. So what the heck's a sweep? Sweeps are alerts when large market orders sweep through price action levels instantly. So, for example, let's say an institution has 500 contracts they want to buy right now, but the ask only has 100 at each level. That means the orders sweep through 4 to 5 different levels in milliseconds, right? This is visualizing what happens. In this case, there's a pattern. So there's a buildup. So this is where a lot of stop runs happen, is price consolidates, stops accumulate, growing clusters appear. In this case, this. Price is pushed to the liquidity cluster, which is the stop hunt, like this right here. This is a live example. This was a major support area on the charts, and then we ended up completely sweeping under it, stop running, and then we reversed for the rest of the day. So we hunted, we triggered everyone out, and then we reversed. So stuff like this happens a lot, and it's kind of hard to see. I mean, you can definitely see it on price action on candlesticks for sure, but it's much more easier and more visualized to see it on Bookmap. So another thing about stop runs and failed breakdowns, truthfully, this is probably one of my highest probability setups when it comes to order flow. People get stopped out a lot. They get stop hunted a lot. But once you actually kind of identify the pattern, you can reduce getting faked out and you can start capitalizing on stuff like this. So I consider probably a 5 stages, right? So stage one, marking consolidates, in this case near a support. Stops accumulate below. Then stage two is the break. So we break below support. Stage three, we sweep. We have heavy red dots. People are euphoric and start shorting. Oh, we're breaking below a key level. In this case, let's say pre-market low. A lot of people short there and get trapped. Ideally, you don't want to short there. That's the trap, right? So then stage three is price stalls below that level. You see some volume, in this case, a volume tail forming. We'll talk about that in another video. That'll be more of an intermediate slash advanced stuff when we talk about footprints and different things such as like P shape and B shape and all that different stuff. But not to confuse you, we'll keep it more basic. So stay tuned for that. But anyway, stage four is we reclaim that level and that's your entry. So everyone that got just trapped, right? The trap shorts cover, adding fuel to the fire, and then we ended up usually reversing to the other side. Now, I'm not saying initial breakouts can work, but I'd say it's better to identify stop runs and potentially trade the opposite and trade the failed breakdowns or the failed breakouts. And this way your risk reward is tremendously better. You can screenshot. It's just kind of questions to ask yourself before any trade. So is this price at a key level? Yes or no? Do you see heat map? Yes or no? Is order flow pattern forming? Yes or no? Has any confirmation occurred? Yes or no? Is your risk defined? This is very, very important. Very, very important. So you need to have a plan before you enter any trade. You need to know, okay, where is my stop loss? Where is my target? If you don't have that, then you have truly no plan and you shouldn't be trading. Because when you get into an actual trade, your brain can get erratic. You can get emotional. And if you don't have that plan going in, what can happen is, for example, let's say I don't have a concrete stop loss planned out. And I'm just kind of winging it. Oh, I'll get into the trade, then I'll think about it. So once I'm actually in the trade, that's when emotions come into effect, such as hopium. So a prime example, something that I struggle with a lot in the past, is I would move my stop loss a lot. So let's just say my stop loss is at, I don't know, 70, but the price action is coming close to it. And I'm like, okay, well, maybe I'll move my stop to 69.70. So, I'm just moving my stop lower and lower and lower. And sooner or later, I'm just taking what should have been a smaller expense. It turns into a very large loss. Always have a plan. They're very, very important. So I would screenshot this, and just something else I would screenshot for a quick reference is just the different patterns, the absorptions at resistance and support, and the failed breakdowns and the breakouts. Kind of the breakdown book map, so it's not super overwhelming. Current order book, session volume profile that we talked about, and the time and sales. But remember when we were talking about the session volume profile with the different nodes, so the higher volume nodes and the lower volume nodes? It's another cool thing about Bookmap, kind of similar to TradingView, you can replay all your trades. And you can fast pace, slow pace, however quick and slow you want it. But this way, let me just kind of populate some data. So if you see here, this is lower volume nodes, a little bit of a higher volume node, and this is the point of control currently. All right, so if you see here, visualize reference. So this is pretty much where a lot of the volume was just traded. And now keep in mind, this is still market open. This is not really much context, but you can kind of see here visually, a lot of the volume was traded right here, which is creating the point of control, and then the lower volume nodes and a little bit of the higher volume nodes. So what I would want to do, let's just say for a short, I would want to see ideally we come back to the point of control. We fail to break above it. So we have bullish, we have green dots. In this case, look at the dots. We have larger green dots and smaller green dots, right? We care about the larger green dots. So going back to that example, using the point of control as a reference, I'd love to see a bounce here. We have large green dots attempting to break above here, but we ended up actually just stalling out, and then some red dots appear right here. Then we can use the point of control as a stop loss, right? So that's just kind of one reference on how to trade with session volume profile. There's definitely a lot more tips and tricks around that, but since this is a beginner video, I don't want to completely overwhelm you. I'll make some more videos about different indicators and all that different stuff in the next couple weeks. So another thing that's very important when you first start setting up Bookmap, you don't have stuff like this. You would have to actually configure your columns and add the current order book, the session volume profile, and the time and sales. So in this case, you would add it, just label it, and then pick whatever you want. Current order book, session volume profile. Here are my settings. I also include the VWAP line, but for this video, I took it off. And time and sales is right here. So going to the time and sales, remember how I was talking about consecutive greens? This is what I'd like to see. Like if I'm thinking something bullish, I want to see something like this on the tape. That's giving me extreme bullish vibes to take a trade, right? Whereas if I'm seeing maybe something, let me see if I can find an example, something like this, a lot of red, then I'm thinking, okay, that's bearish. And the order sizes matter. You want to filter depending on the specific instrument. So I trade ES and CL specifically. So ES and CL are different. So something that, so I feel like honestly anything underneath 10 sizes is pretty small for ES. But since CL is a little less liquid, 10 is a pretty good size. So usually what I do for ES, I do about 20 to 25 just to filter out noise. And then for CL, I do about 10, since it's a little bit less liquid. And then another thing, your heat map won't look like mine when you first set up. You would have to right click on the heat map itself, hit heat map settings, and then you'll see lower cutoff and higher cutoff. I'm assuming your lower cutoff will be somewhere at like 20 or 40, and the upper cutoff will be at probably like 90. So what you'll see, so like look here, what I see now versus this is what you'll probably see when you start. It looks like, it's very, very hard to read. It's a lot of noise because of all the blue and the yellow. So definitely you want to filter that noise out. So you would right click and the heat map settings, complete eye cluster, you would turn the lower cutoff percentage from whatever the default is all the way to the top to 80. And that will help filter out a significant amount of noise. So remember how I said the reds and the oranges were primarily what you care about? This filters pretty much only to that. That's an absorption. So 240 orders were just added right before the price action came right here. And you see a giant, giant green bubble. Those were those orders being eaten right here at the 10:07 mark. Those orders just got completely aggressively filled. And now we end up holding that area and we continue higher. What you'll see, just so I don't have to look for it, but what you'll see about spoofing, what you'll see is something like this. You'll see the indicator adding sizes. So pretend this is not here. You'll see the indicator adding the in this case 240 contracts, but then momentarily afterwards, like say if we're coming up to the price action like this, and you see this, the line is no longer there. Like you see something like that, the line is no longer there. That means that person or the institution completely took those limit orders away. So that's a spoof. That's a fake order, right? You want to see the line consistent. That's very, very important. The sweeps, here's the sweep. If you see here, very large aggressive selling and tons of orders came through. So we ended up sweeping multiple levels at a time. You can really play around with Bookmap. There's tons of ins and outs. I'll do an order flow series and a Bookmap series. So the next video we'll talk about the cumulative volume delta. We'll talk about the actual footprints and trading footprints and really diving deeper into time and sales and session volume profile and everything like that. But I really hope this little quick tutorial on Bookmap helped. And one last final thing before we close out today. So now you can see the market. You've got the heat map, you got the dots, the patterns, the strategies. But what I've learned the hard way, and I'm talking from personal experience as being a trader from 6 years, I've blown plenty of accounts before I figured it out. The tools and the strategy don't matter if your psychology is skewed. Right, you can see the perfect setup. You can see all the absorptions. You can see everything like that we just talked about. But that doesn't fix anything if you're still revenge trading, if you're still over leveraging, if you're still breaking your rules and not being accountable with yourself. And we've all been there, right? It's okay. But if you really want to level up, we need to be accountable. We need to be better. And that's exactly why I built Metronome, which is a trading journal. But it's not like other trading journals that only track your P&L. Metronome tracks both your psychology and your executional data. There's something called a Metro score, which is a 10 metric assessment of your trading discipline. It's not just, hey, did you make money? No, no, it's did you follow your rules? Did you stick to your plan? Pre-market checklists, sleep, body and mind check-ins. There's tons of stuff that I built in here that really help. And there's even an accountability mode that flags when you break your own rules and calls you out. It's currently in open beta and free to try. If you'd like to check it out, I'll drop the link of Metronote and Bookmap in the description. If any of this resonated with you, I'm glad and I appreciate you for listening. I hope you have an absolutely wonderful, wonderful rest of your day. Stay safe and see you next video.